How to make $1,000 a month through dividend investing. Who would not want to earn an extra $1,000 a month, especially when you don't have to put in any extra effort? It's a decent amount of money, no doubt. It will allow you to retire earlier as funds are being deposited into your account every single month. That's what dividend investing is all about. Let me tell you that the strategy of dividend investing has a massive compounding effect, especially when dividends are being reinvested back into your holdings. The good thing about passive income is that you make money while you sleep. Hello guys, and welcome to the Glory Investing Show. In this video, I'm going to talk about how you can make $1,000 a month through dividend investing. Make up your mind and start learning how to invest. The first thing you have to do is to make up your mind to learn how to invest at the right spot and what strategy you should use, and how to start from the beginning. When starting from scratch, a lot of people complain that earning $1,000 is a bit too difficult a milestone, and not everyone is able to achieve it. Let me tell you one thing. You will miss 100% of the chances that you don't take. Those people who think that earning $1,000 a month through dividends is very hard actually don't know that compound interest is the eighth wonder of the world. I'm not saying that you will immediately earn $1,000 per month. You'll have to start small. You'll have to start rolling the tiny snowball that you can easily handle. Gradually, you will notice that things are getting better and better, and the amount that you invested starts working for you until the snowball becomes massive, and it will be very difficult to stop it. So, what you need to understand is that you should not underestimate the power of compounding. How to start? In order to start, there are a couple of things you need to know. But before we start talking about investing in dividend stocks, we need to provide you with the right tools to do so. You guys can use Moomoo app. Open an account for free, deposit $1 and get the 5 free stocks. Free stocks, trading with no fees, level 3 data, and all of that with one click on a link that we have below. Okay, now we can go back. Let's take an example of McDonald's stock. The first thing you need to focus on is the forward dividend and payout ratio. If you don't know what is the forward dividend, it's actually an amount in dividends that you get annually. So in the case of McDonald's, it is $5.52. I know you may be thinking that it's not too much to live your life on this dividend, but don't ignore the principle of compound interest. This gives the company a 2.20% dividend yield. If we see today's market, it's not really bad. The next thing you need to focus on is their earnings. So currently, it's $6.33, which means that out of $6.33, the company pays $5.52 of that amount, and the rest is $0.81 left over, which the company uses to reinvest and grow its business. You need to understand that earnings should be consistently higher than the dividend payouts. You would never allow them to pay more than what they earn. The next thing you should check is the dividend history. Generally, you want to have a stock that you can look back upon and see dividend upsurges as time goes along. So in the case of MCD, it's not too bad as they have increased significantly over the last 12 years. However, they declined their dividend during the last recession, which was not a great sign. Now the next thing you need to focus on is the quality of the company, which a lot of people don't pay much attention to. If you value your money, then you should have enough knowledge about how this company will perform in the next 5 or 10 years. Will that company remain solid in its business and give a tough time to its competitors? You don't need a company that sometimes performs well and something goes down. There is reason why I choose McDonald's and not Pizza Hut. You need a company that constantly remains at the top. If you don't see the company being on the market in the next 20 years, why would you invest in it? When we think of stock trading, the phrase buy low, sell high is often echoed as a strategy for success, and that is right. Maybe, or is it? Warren Buffett also said that you need to invest in those companies that have a solid competitive advantage. Now, you don't need extra dollars to buy McDonald's stocks and start dividend investing. You can start small, as you can start with Bank of America. The price of its share is $38.82. Coca-Cola, which has a share price of $64.73, and AT&T has a $19.42 share price. There are many other small price stocks that you can start from. Now, the important point here is that you need to be very consistent in investing and make it a habit instead of wasting your money on useless items that most people buy to show off just to get some compliments from others. Make a decision today that you want to look rich by buying useless stuff, or you actually want to be a rich person. If you really want to achieve a milestone of $1,000 per month, you need to change your habits and start thinking outside the box. Whenever you get your salary, instead of thinking that I can't wait to spend it, you can say that I can't wait to invest it so that I become financially free. Let me tell you one important thing that most people don't know. The investor has a completely different mindset from an average person. The normal person becomes happy from short-term gratification. On the other hand, the investors always have a long-term plan in mind, like reaching a $1,000 a month target. Now, make a decision. Either you want to rely on short-term gratification, or you want to make a solid long-term decision. Once you make up your mind and then pursue it, there are some other dividend stocks that you can also start with. 3M is a stock that pays a great dividend yield of 4.01%. And the good thing about 3M is that they have increased its annual dividend for more than 61 consecutive years in a row, so there's no confusion in saying that you can blindly trust their dividend. Now, the share price of 3M is $148.66 with a market cap of over $84.61 billion. The company can be used to expose your portfolio to multiple industries including U.S. healthcare, consumer goods, and worker safety. They produce more than 60,000 products under numerous brands. The other stock is PepsiCo, a famous company that has a dividend yield of 2.49%, and the company has also increased its dividends for 48 consecutive years. There is no confusion in saying that their dividend is reliable. And it's worth mentioning that they operate under the consumer staple sector. Besides just selling Pepsi, they also own Gatorade, Doritos, Cheetos, Mountain Dew, Lay's, and many other solid brands. Now, it's the important point that you might notice is still all these companies are strong, and especially if you are starting from scratch, you need to focus on these types of companies that have a reliable future, are financially strong, and can easily afford their share. So if these companies perform great in the coming years, you'll feel motivated as your investment will become double and triple. I would say that choosing the right company is the key to getting a consistent flow of income. What do you think? Let me know in the comments below. Now make sure that you understand the stocks before you invest even a single penny. You might also want to note that those people who invest earlier than understanding the stocks end up losing a big chunk of their money. As a result, they say that investing is not a good option and you lose your money. How much should you invest in getting a $1,000 dividend each month? If a stock pays a $1 dividend and you buy shares for $20, the stock has a 5% yield. If you were to invest $1 million, you would receive $50,000 in income after the year's worth of dividends. Now I'm going to be very realistic about it, as it's not very easy. You have to put in your time and effort in the beginning. Suppose an average dividend offers about 3% yield annually. That means if we invest $100,000, we will receive around $3,000 yearly, which means $250 per month. So we need to invest $400,000 of an investment overall to get a $1,000 dividend per month. Here, it is important to note that some of the companies pay their dividend every quarter, so keep in mind, if you think that $400,000 is a huge amount, then understand that you have to start small until you reach your destination. If you are invested in checking how to make $1,000 every month with only 3 stocks, click on the link that appears on your screen right now. Using the high dividend growth rate, your focus is on buying stock in companies that pay low dividends but are growing quickly. This means that you are buying profitable stocks at a lower rate and making a large amount of income over a 5 or 10-year period. It all depends on whether your goal is immediate and stable income or whether you prefer long-term growth and profit. That's all for today's video. Make sure to download the Moomoo app and get up to 5 free stocks. If you found this video helpful, make sure you smash the like button and share it with your friends. Don't forget to share your thoughts with us in the comments section below, and while you're here, click to watch one of these 2 videos appearing on your screen right now. I'll see you there. Take care and stay tuned.